I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, InvestmentU.com. Welcome back to the show, Sean.
Thanks very much for having me on.
What is really catching your eye right now?
It has to be the rally in precious metals. We saw a correction for a bit. I hope people loaded up while we had that, because I kept warning people. You know, it looked just like a flag, a pattern, and sure enough, that's probably what it was. We had a correction, lasted 3 weeks, and now things seem to be heading higher. Silver going even higher percentage-wise, and so this could be quite a run for the precious metals coming up. They still have to deal with overhead resistance. Gold has to get through 1,300. But if that happens, then we'll be off to the races for a while.
Why is it we have these resistance points?
Well, you know, that's kind of a thing that, you know, you learn in the markets. Everyone, or I shouldn't say everyone, but a bunch of people bought at those prices, and they're stuck, right? They actually bought at a higher price, and they're stuck. They really don't want to sell. So once the price gets up to where they can break even, they'll at least sell half their position. And that brings new supply onto the market. And so that tends to form overhead resistance. The same thing on the other hand, when things are going down, when you get down to a level where it's like underwear, when you get down to a level where people think they can put new money to work and do that kind of thing because it's an area that was price resistance before, then you'll see more money coming in. And so, you know, we have these things all the time. So I'd keep an eye on 1,300, but I'd say for gold, things look pretty bullish. And for silver, I mean, silver just looks strong. There's a whole lot of stuff going on for silver. Supply is, you know, tight, very tight, even tighter than it is for gold right now. And the industrial demand just seems to be cranking up. Of course, we have like solar. I mean, that's huge demand for silver, but it's other things as well. It's used in, say, the chemical industry quite a bit. It's used in electronics. It's used in all sorts of things. So you put those together, and the demand is very strong. And then we have the mom-and-pop demand. I just wrote an article about this for Investment U, and we've seen strong demand for, like, gold coins. Most people know that, but the demand for silver coins is just, I mean, it's just surging year over year. People are picking up silver. It seems like they're stuffing their socks with them. I don't know what's going on. But I think, like me, they think silver looks cheap at these levels. I wouldn't be surprised to see $20 silver by the end of the year, certainly. And so when you look at that, the math on many of these silver miners looks very good indeed. And so that's what I would tend to be looking at.
And, of course, the medical use of silver. Uncle of mine in Ireland makes socks that have silver in them because it stops bacterial growth that can lead to infections for diabetics, and those socks are now being prescribed across Europe.
That is fascinating. Yes, I hear about more medical uses for it all the time. Now, one caveat is that technology improves, right? So year over year, they have to put less silver in the, like, solar cells and stuff. They used to put a lot more than they did, but gradually over time they've been lowering the amount they have to put in each individual cell. However, at least in solar, that sector is booming so much that even though it's become more efficient, they're using a lot more silver, and so the growth of demand for silver in the solar industry is growing by about 20% a year.
And how well is silver working out? I remember for the longest time people said, well, it was still cheaper to use oil or natural gas than silver for solar.
Well, I mean, there will always be substitutions when price comes into play. You'll remember for a long time when copper seemed expensive. People were always looking for something else they could use for, mainly aluminum. That was always the substitute they were looking to use. Sometimes it did, sometimes it didn't. And so, I mean, I'm sure people will look for substitutes for silver and stuff like that, and that's certainly something to be aware of. But so far, it is one of the metals that is, it has the unique properties that make it extremely useful.
Yeah, nothing's more reflective.
Right, exactly.
With gold being gathered up by China and Russia at a tremendous rate over the last 5 years, is there any chance that China is going to go to a gold standard for its currency?
I don't think so. I think that they'll want to own a lot more gold because they want the flexibility and the independence. But I don't think they're going to a gold standard simply because they like playing with funny money as much as the central banks of any country, right? And their debt situation is rather insane. So I don't think that we'll actually see a gold standard. Of course, we can draw, we can do hypotheticals about that all the livelong day. But one thing that is for sure is China, the Chinese government is buying a lot more gold. The Chinese people are buying a lot more gold. And so when you put those things together, we'll probably see a big bump in demand from China this year. Anything can happen, and the Chinese consumers tend to be price sensitive, so that could cap any rally. But that still leaves room for a big move higher, and that means we could get to 1,400 in gold rather quickly. So we'll just watch and see how that goes.
And of course, we have gold bugs telling us 1,500. Try 5,000 or 10,000 in the near future.
Yeah, my longer term, like say the next 18 months, would be $2,000. I don't tend to look beyond that because, again, I think things will come in where, there'll be price reactions. People will think that it looks too expensive. Things don't go in a straight line. Now, one thing that would be more supportive of a higher price is that you can't just turn a gold mine on and off. I mean, one thing I do is I fly around all the place. I was just down in Mexico last weekend, by the way, looking at 2 silver mines down there. But when I look at these mines, even if they were mines that were in use not that long ago, and they've been on care and maintenance, they still can't switch them on overnight. There's a lot of work that has to go into it, and that's in the best case scenarios. If it's a new development, greenfields development, it takes years and years to get those things up and running. And so that's the thing, I think, that could really send the price of the metals really soaring, is we could see a real squeeze in the supply side. In the demand side, ETFs, I mean, they're just scooping it up. Mom and pop, like I talked about, central banks. So there's all the stuff going on that on the demand side will probably go up for a while, but at some point it is going to get price sensitive. It is going to get to a price where people start to say, that's really a bit too much to pay. But the thing that can squeeze it is the supply, because you just can't bring new supply on quickly.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, there's more going on in the commodity markets, though, than just gold and oil.
Yeah, well, it seems like a bull market across many commodities. Maybe not, say, copper and iron, which still seem unable to actually move out of bed in any meaningful fashion. But when you're looking at the agricultural commodities, they're doing ripping well. Coffee's way up, which I find somewhat distressing because I like to drink coffee. Then, of course, oil, that's doing extremely well, helped out by the, big forest fires up in your native Canada, and the fact that Nigeria, they've been just treating people horribly over there for decades, and finally people are fighting back, so their exports are just plunging. So, you put those things together, things look bullish for oil. Things certainly look bullish for grains and coffee and sugar. Oh boy, both sugar and coffee are being helped out by problems in Brazil. We live in a big interconnected world, right? And so even though it's not right in front of your face, something can go wrong somewhere else in the world, and it affects the price of the things you use every day. And so that's what we can see in the agricultural space. That's what we can see happen in things like wheat and soybeans and stuff like that. That's what we are seeing happen in sugar. That's what we are seeing happen in coffee. It hasn't happened in things like, iron and copper yet, but who knows? Though I have to say those markets look pretty well supplied right now.
The war on sugar, all these health authorities are trying to get people to cut back or not use it, hasn't had much of an impact on the consumption of it.
Well, yeah, that's because their great plan is to raise taxes on it. Really, it's an educational thing. I mean, you have to teach people why it's in their best interest not to eat so much sugar. And if they still want to eat sugar after you inform them of that, that's their own choice. There's only so much you can do. But the punitive stuff is just stupid. It just makes sugar seem like a secret treat. That's only counterproductive. But now, then again, one of the things that actually could, move sugar higher is that Brazilian ports are so congested they can't get sugar out of them right now. So I actually think that actually points to a real, let's call it a potential for a turnaround in Brazil. I mean, because that country, well, economically speaking, has been on the ropes for quite some time. But if their ports are so congested that ships can't get in and out, that tells me that things might be moving along there.
What's causing the congestion?
Ships want to load and unload not only sugar but other things as well. They also have a huge soybean crop, and that's being caught in all the ships trying to get in and out of Brazil right now. That's just one of the many things that we have to keep in mind is, things might be problematic in Brazil, and that can raise prices here at home.
Of course, yes, when somebody says Brazil right now, all they think of is the Zika virus, but that's probably not a congestion factor.
Yeah, and, our media tends to overplay things. That's not to say that the Zika virus is not a real threat, and the U.S. Congress should appropriate money to actually deal with it rather than sitting on their hands because they're idiots. For example, when people think Mexico, they think, they have all those horrible gangs down there, all the drug violence, stuff like that. I was just down there. It's actually much improved. It's a nice place to go now. Of course, I'm sure there are bad areas. I don't go to the bad areas. You just go to the good areas. And so as long as you're being, somewhat smart about it, I'm sure you can have a great time down there as a tourist. I'd love to go as a tourist down to Mexico. Of course, I'd have to convince my wife to do that, but, that's fine. And Brazil, the Zika virus, I think that, again, that's a thing being hyped up. There are things you can do. Gosh, they used to do so much for mosquitoes when I was a kid, and we came down to visit Florida. There would be these big trucks driving through the neighborhoods, putting out these big fog machine type things of stuff to keep the mosquitoes away. Of course, that was probably poisoning us too at the same time. I seem to turn out okay, but I don't know if that would be allowed under current EPA regulations. So, it's a thing you have to balance, but I do think that the Zika threat is being overblown a bit.
The U.S. jobs report last week was horrible. 38,000 jobs created instead of the usual 175,000 every week. Why has the job count drop so radically, or was that just an anomaly in the statistics?
I don't think it's a anomaly at all, I'm afraid. I think it's actually bad news. For the past 4 months, we've had the whole jobs situation look worse and worse. And part of it is, trouble in other countries, economic problems. They're slowing down. They don't need things. Part of it is people being replaced by robots, frankly. There's something of that. And partly we just have very slow economic growth here in the U.S. And I think it's a crisis that people can't actually grasp. I mean, if you go back to the 1970s, it wasn't that unusual to see GDP growth of like 5%. What we wouldn't give for that now. It's true we have a much larger economy now, and so maybe you shouldn't expect it to grow a lot, but I'd expect it to grow more than it is, especially with the way that the central banks pump money and stuff like that. They aren't getting any bang for their buck. And so that worries me. Now, if we do see energy prices continue to go higher and it gets up to $60, that's probably going to restart some stuff in the oil patch. And we'll see work start to pick up there. As a matter of fact, the rig count went up in the last week for the first time in forever. So that's somewhat good news. However, if we do have more activity in the oil patch, of course, that's going to put more oil in the market. And so then we'll have the old balancing act there. Will that force down prices? Now, on the bullish side, we are seeing U.S. demand for gasoline is like hitting new records. No one thought that was going to happen, because people are moving to electric cars and stuff. But the price of fuel is so low, people are just driving a lot more. People seem to be taking a lot more driving vacations in the summer and stuff like that. And so there is economic activity, not enough of the good stuff that we need, though, not enough to get that job growth going. And so we seem to be in this kind of hazy twilight zone. Everybody has their eyes on the Fed. I think the Fed will not be raising at least until the winter, and that's only if the economy improves. And there's no guarantee that's going to happen right now.
Well, Janet Yellen still is making noises about raising rates, but they've always said it'll be data-based. What data would cause them to raise it?
Well, that's a good question. One would be inflation, and certainly if we see commodity prices go higher, that's inflationary. And so they would take a look at that for sure. But they say they look at the payrolls data. Well, you can't really ignore this. They say that they're looking at at what happens in Europe. There's a big vote coming up in Britain on the Brexit. That is having Britain leave the European Union. That's on June 23rd. And right now, the polls show that they would vote to leave. If that happens, that could send a shock to the European Union. And I know that the Fed has said they're watching what happens there because they don't want to be giving any shocks to the system with a rate hike if there's another shock to the system with Britain leaving the European Union. So we have to watch that. And I think the Fed, between slowness in China, because China seems to have one piece of bad news after another, when they're not making up numbers. When you put these things together, I think the Fed is really blowing smoke about raising rates, which they've done before, by the way. They finally got around to raising rates at the end of last year after promising they were going to raise rates all year long. It took them an entire year to do it. If they follow that pattern, then we'll see a rate hike in December. And, maybe we will, maybe we won't. The world changes. I tend to actually think that things don't really seem to be grabbing gears right now. Now, new data could come out, and I'd be happy to change my mind. But right now, everything seems to be stuck in second gear.
If Britain voted to leave the European Union, could you see chaos in the markets?
It's not that big of a country. It's bigger than Greece. But it's not that big of a country. Again, I think the fears would be overstated, and we'd have to see how it would go. The biggest hit would be to British farmers, and I don't know any British farmers. So I'm not going to worry about that much because they get price supports from the EU, and there's certain other things that they get as being part of the EU. But I do think that if they were able to put it together, they would be able to break it apart. And just having a piece of the EU like Britain chip away, that actually wouldn't be such the heartbreaking thing. But, the media being the media, you can expect plenty of hand-wringing going up to that vote. You can see plenty of artificial hysteria. And so be prepared for that, because you're definitely going to see some.
Well, so many people I know from Britain are of two thoughts. They can see both the positive and negatives, and that really has them worried about which way to go.
Well, I know, and I don't know what choice I would make if I lived in Britain, but it does seem like the EU really constrains the, member countries. They can't make their own trade agreements, And so if I was going to vote anything, I would just think, our economy really needs to be able to be flexible, and they don't have that flexibility in the EU right now. I don't know why the EU insists on a austerity straitjacket. That just seems to be their answer to everything. Poor Greece. I mean, that's a country that needs to leave the EU. They need to get thrown out for their own good. And not that that's going to happen, but maybe Britain doesn't want to become the next Greece, to have an economic crisis and then really depend on aid from the EU so much that you aren't allowed to leave and straighten out your economy. And so that, I think, is one thing that people have to have in mind.
Well, there is a reason why the British kept their own pound. Because
yes,
they did fear.
And which has served them very well. If only Greece had that, then their disastrous economy might not be in nearly the shape it is.
Sure, because they could give you a discount on the drachma if you went on holidays there.
Right, and of course they lied their way into the European Union with the help of the big banks. No one went to jail over that. Gosh, we could talk about that for an hour. It's just crazy. So yeah, I think that the flexibility is a key, especially for a nation like Britain. Now, the danger is that you get to a point where no one wants to buy your debt. And we have seen that with companies on the outer edges of the European Union that are not in the European Union, because people look, well, I could buy a debt from some Stan country over there, right? Or I could buy a European Union debt. I'd much rather own the European Union debt because I won't lose sleep over it. And so that would be the risk for Britain, is if they're truly independent, then the actual cost of issuing debt might become prohibitive for them. But you'd really need someone from the Bank of England to speak to you about that.
Well, he's a Canadian, so I'd have no problem understanding him. Sean, thank you so much for speaking with us.
Hey, it's always great. Thank you very much.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.